हम लोग ट्राई करेंगे शायद थोड़ी इंग्लिश थोड़ी हिंदी करें, मे बी नॉट एज मच गुजराती एज Nilesha brings to the table. So that is a standard disclaimer that I'm making at the start of this session. Now, in the first session, we tried to establish or tried to guesstimate के the rising decade of India, या जो आप nomenclature दें कि India investing opportunity बड़ी है. Now all of us know that, so that is fine. Over the last 1-2 years, मुझे काफी लोगों ने बोला है कि they know where to invest. Lot of stocks are discussed on media, so everybody knows which are good companies, bad companies, etc. But what are the characteristics that separate the best investors from the other investors? वो क्या चीज़ है जो एकदम गुणी इन्वेस्टर हैं वो करते हैं अपनी प्रोसेस में, which all of us can hope to imbibe in our process, so that we can also try, and if not replicate, then try and at least replicate the process for the best results. And I think over the next 1.5 hours, what we'll try and talk to both Mr. Ramesh Damani and Mr. Utpal Sheth is, what are the mental models that they bring to the table when they are doing their investments? There are some requests, by the way, that have come from people also saying that, can we also request them, what is it that they learn from their mistakes that they may have done in their lives, so that we can try and not do them as well. But let me start, and either of you can start. When you think about your investing career, and when you think about what are the processes that you bring to the table when you are doing your investments, have they changed from what they were, say maybe 10, 15, 20 years ago?
Good morning, everyone. It's a privilege being here with all of you. Nearest to your question, change is the only constant. So I'm sure each one of us has changed. And as an investor, you need to be adaptable. So all the more reason that you need to keep evolving, right? However, there are certain fundamentals which don't change, right? So there used to be this retailer, Mr. Kishore Biyani. He used to talk about a phrase which seemed very apt. It was called rewrite rules, retain values. Okay? So you have to keep rewriting the rules, but retaining the values. I started my career in 1986, 87, starting to learn. And since then, I think the biggest change in my perspective in my learning has been that at that time, I was looking for the difference between the price that I was paying and the value at the time of investing. Okay. To today, the evolution has been, I'm looking for the difference between the price that I'm paying and the terminal value maybe 10, 15 years from now. So it's for me that one big change. And the consequence of that change was that many years ago, what I was looking for, that was a value arbitrage. It was focused on tangibles and catalysts, things which are much more short-term in nature and one-time in nature. I'm now looking for business models and management capabilities which are structural in nature, which play out over a very long period of time and which keep compounding. So I would say that has been the biggest change in this journey of my learning. I've been very fortunate to have, I think, some of the greatest teachers possible in the capital markets. right from Rakesh ji to Navish bhai to Vallabh bhai to my father, Hemendra Sheth and Asit Kotecha at ASK. So I'm grateful to all my teachers.
Awesome. Can I just ask a repeat, a follow up to you, which is that if you had a choice and if you were to think back, would you have wanted to do this even 15 years ago, or was the time right for what you did then back then, and currently the time is right for hunting for terminal value?
No, if I had that insight at that point of time, I would have done that.
Okay. Thanks. Ramesh, the same question to you to start off with.
Thank you, Neeraj. Thank you, Baroda. What a great city, and thank you for all the love and admiration. I think Utpal and I can honestly say we are overwhelmed by the affection we got. I mean, in the break, it's actually very nice. Only if our wives could see us now, then they won't criticize us so much. But leave that part aside. Thank you again, Neeraj, for hosting this show for us. I think, as usual, Utpal answer very concisely what I would have said. I think the biggest transition that has occurred to me, I came to the markets in 88, 89, didn't have a lot of money at that time, as most people didn't when you start off your career. And I was more interested in generating income that time. भाई साल का 20 लाख खर्चा हो जाए, 30 लाख हो जाए, 10 लाख extra बन जाए, somehow survive in the mode out there. The transition happened when I realized I don't want to generate income, I want to generate wealth. And the wealth is generated through longevity investment, superior compounding rates, buying a better business. So over 30 years, that journey, that intellectual journey has taken place. That has made me not from trying to catch a fish, but trying to understand what keeps fish going in the ocean, if you will, Neeraj. And it's an extraordinary journey. And the good news is that anyone sitting here today, especially the young people, can embark on the same journey. Just to paraphrase a quote I heard, I talked to one of the wisest investors I know in India a few years back. And he'd been through it all. He'd been through the 80s decade of Rajiv Gandhi's first liberalization, 90s decade of India's actual liberalization, the tech boom, the infrastructure boom. And someone asked him a very plain question. He said, in your 40-year investment journey, what has been the best decade for investing for you? And without hesitation, he replied, the next decade. So that's the point I want to give to you all, that no matter how far you seem the journey from 800 to 66,000 index, the next 10 years are probably more promising. So if you start on the journey not of income creation but wealth creation, you will all be fairly richer and much more financially free 10, 20 years from now if you stick to that journey.
Wow, awesome. A round of applause there. Yesterday at dinner and we have to admit that futures and options are an integral part of what's happening in the markets currently. And I was a bit worried that the audience might want to hear about F&O. And I knew that we are not going to talk about F&O, right? Because as I think Utpal said that, or maybe Ramesh said that, the idea is to create wealth and not just money. And I think the creation of wealth can probably happen by learning from the people who've created wealth in the most admirable fashion. So I think over the next 1 hour, we'll try and do that. We will have a small round of questions, 2 or 3 maybe. I would urge people who ask questions as well to not try and talk about trading ideas, etc. The things to learn from these gentlemen are much beyond that. Ramesh, a follow-up question to you. When you, what separates, like I said, what separates the wheat from the chaff is not just which stock or which investment idea that you bought into, but how did you arrive at that idea? How did you distill the thoughts when you were confused between whether or not to go for it? And if you went for it, how did you get the conviction to really bet the house, back up the truck and buy, so on and so forth? Can you talk a bit about that?
Sure. You put it well, Neeraj, when you said what are the mental models we use. And also it's an evolutionary journey. And I'll just go through some of the basic mental models. I mean, Charlie Munger talks about how important it is not to just read a balance sheet, but to understand social psychology, marketing, engineering, when you pick a stock. So let me just go through a couple of them for you right now. One, of course, the most fundamental concept in investing is margin of safety. As your mother must have taught you, रुपए की चीज अपने को 40 पैसे में खरीदनी है. You want to buy things cheap, right? But let me give you another example to say how applicable the margin of safety concept is. We all know recently that There was a gruesome accident when the Titan went down and burst in the sea a few days ago. You've all read about it, I'm sure. Now, why did it happen? Because he didn't build redundancy into the system. All right. There was one porthole attached to the titanium hull. The titanium hull itself was not correct for this place out there. You could not open it from inside. There was no secondary rescue system. Once the oxygen ran out, it ran out, and the people died. They died, if you ask any engineer, he will tell you, because there's no margin of safety in the titanium. Okay? Let me give you another example that happened 50 years ago. Apollo 13 was racing to the moon. They had an accident. What the astronauts did, they went from the command module, which had a problem, to the lunar module, stayed there, came back to Earth, and managed to survive. Because the engineers at NASA had built a margin of safety into their business. So margin of safety is a very fundamental and important concept that we need to understand in the stock market. कि रुपए की चीज अपने को अट्ठाने में खरीदनी है. Then good things will happen and the prices will take care of it. So the first concept I ask you, if you're looking at longevity of investment, is look at the margin of safety. Are you buying cheap? Sometimes you might want to buy a stock because you think it's going up, because FI is buying, because you have some tip about the stock. But typically that doesn't create wealth. That just creates price fluctuation, right? So margin of safety comes when you understand the value of what you're buying. For example, in my own career, I will give you an example. Again, I'm not recommending the stock in any shape, way, or form. I think Utpal and I discovered the stock together. He used to point out to me, Utpal and I used to talk to him, that you are getting United Spirits, which own 50% of India's liquor market, for 200 crores. Now think about what I'm telling you, that you are getting a country of 1.4 billion people, out of which each year maybe 1 crore, 2 crore come under 21 years of age so they can start drinking. And the best brand names for 200 crores. So I knew that was a margin of safety, that if it was a private transaction, you would have probably paid 5 times that amount, or now it's 100 times that amount. But the stock market sometimes gives you the great bargains. So sometimes you buy them when they're cheap and have the patience to hold them till they actually happen. And actually, Utpal gave me the first idea of United Spirits at that time. So maybe he'll add to that.
No, thank you, Rameshji, for your kind words. In Gujarati, we have this phrase, कि कुआमा होए तो हवाड़ामा हावे, right? Which means if there is water in the well, only then will you be able to get water in your bucket. So, in that sense, that concept of terminal value that I was talking about, or which Rameshji described as 1.4 billion population, 50% market share of the liquor markets, I think that was enough to give us a context of that potential terminal value. Though, to be honest, I never put it in my mind as a terminal value at that point of time. Okay. But while I found the idea, I think what Rameshji and geniuses like Rakeshji did with that idea is what is much more important. So, buying and selling are not acts of intellect. Rakeshji used to say they are acts of wisdom. Investing is an act of wisdom. Putting it in that context, it's not that you buy at one shot and forget about it. Right? If Rameshji eventually bought 100 shares of United Spirits, I'm sure he did not buy all of it in the first round that he bought. It's a continuum. And therefore, I'm not as obsessed with that framework that I must buy at the lowest price. It's not. I need not always buy at the lowest price. But as our conviction and belief in the terminal value keeps increasing, you keep adding.
Okay. How easy is that? Because for a lot of people, right, if they have bought a stock at a particular price, or if they have seen a stock at a particular price, I'm not associating value here, just price, then to buy the stock 20, 30, 40, 50% higher is a very difficult task. So how do you bring that discipline to your purchases?
So I'll give you a real example, and nobody could do this better than Rakesh ji. He bought his first lot of Titan at 32 rupees. Okay?
Come 10 bonuses, splits, whatever.
Yeah. And then we kept on buying. We bought at 80 rupees, then at 140 rupees, then at 240 rupees. We also bought at 900 rupees. He bought Titan at 30x of his first purchase price also. So you're talking of 30-50% higher. He bought 30x higher.
How? And how do you get the conviction to do that?
That's why he's a billionaire, we are not. That's the reason.
Yeah. So, but the question is again, how? Everybody out here would love to understand how do you get the gumption to be able to do that? What goes behind it?
It's very difficult. I mean, just because Utpal says it doesn't mean it's easy.
Yeah, it is not.
Very, very difficult to do it. So only the truly great investors are able to do it out there. But I'll just come back to the margin of safety to explain that point to your audience a bit more, Neeraj. Is that you're getting United Spirits for 200 crores that day was telling you. So you could buy 10% of the company for essentially 20 crores. 10% of the company. Which means out of every 10 bottles of beer sold, 1 bottle was mine. If I own 10% of the company. And for 20 crores at that time, you couldn't buy a flat in South Bombay. Okay? That's how cheap it was. That's how great the margin of safety was for me at that point. So I just want to illustrate the point to you that markets give these opportunities. Why they give it, I don't ask. But time and again, at the end of every bear market, at periodical times, people sell off stocks. These great bargains are available. And if you keep your eyes and ears open, you'll be able to buy, as your mother said, Rupi ke cheez chavanni mein. Okay? And that's how you ride your way to fame and fortune. You need to get 2 or 3 right in your lifetime to actually build your fortune. The second corollary to that, of course, Neeraj, is you have to back up the truck to buy, which his boss, I think, did the best of everybody else. Bought at the get-go, bought higher and bought higher than that. Okay? So we learn from the masters. But it's the thing you learn over time as you understand the businesses you're buying and your moral clarity as to why you're buying it. I think you're able to do that. It's very hard to do it. If I ask them tomorrow to buy something at 100 or 300, they'll probably be selling it and not buying it. But to be able to understand that business and the numbers takes a very evolved investor. So I'm not saying it's the best thing for you to do at the get-go, but perhaps as your evolution happens, you will do that.
Okay. You want to add to that? I'm just trying to understand. So, and then I have a follow-up, of course, to what the point Ramesh made. But just the point, right? 30x, right? 30x, log bolenge boss, I buy a stock, if it goes up 10x, nihal ho gaye. Right? You go out and sell. And here you are doing the opposite, which is buying 100% higher, 200% higher, 30x higher. How do you do that?
So before we come to how you do that, we must first understand why you must do that.
Okay, sure.
Right? So everybody knows and talks about the power of compounding. But when you plot that power of compounding, you will see that that curve is a parabolic curve. Okay? So to be in the game at the time that that parabolic effect comes is so crucial, right? So it is important to know whether or not the parabolic effect is behind you or ahead of you, right? And that comes from your perception of that terminal value. So when Rakesh ji would have bought at 32 rupees, he may have thought that the terminal value is X in his mind. It was not a precise number. It was a directional number. But as his conviction, as Ramesh ji put it, as his conviction, as his insight kept on increasing, that terminal value kept on moving higher much faster than the pace at which the price kept on moving higher. Right? So at all points of time, he knew that the parabolic effect is ahead of me. Right? So mathematically, it's important to understand that parabolic effect. And how to do it is something that we all have to learn the hard way. on our own. We have to learn from our mistakes. We have to do our introspections, right? And we'll get it wrong. But even if you get one or two of those right, it makes your life.
Do you guys still do that? I mean, try and make such bets in that hope that you are betting on a few, one or two or three of them will really hit it. You will hit it out of the park, and that will take care of even some mistakes that you make.
I mean, I look at it another way. A lot of people, I criticize myself for not betting the truck on a particular idea. And someone was asking me yesterday only about this point, and actually it was Alpa was asking me. Okay, his wife was asking me that. So my answer to that problem is the second mental model that we use, Neeraj, which is what he talked to and everyone I've talked to ad infinitum, is compounding in the market. So what I try to do is I try and measure my portfolio. Has it doubled in value every 3 years? If it does that, I know I'm on the right track. And just to have some fun with your audience.
I was about to say that. Should we do that exercise?
Yeah, we should do that exercise. Because it's always fun to do it. Who's good in math out here? Anyone a math major? Any young kid who's a math major?
Okay. We have one guy raising his hand there.
Yeah, please stand up. What's your name? Please say that again.
Can we have the mic to Shreya? Very quickly.
So I've done that in a video, but it's always nice to do before a live audience. And if you haven't seen it, you'll enjoy it. How old are you, Kamdar? You're 29. So let's say he has 30 years ahead of him in his professional career by the time he's 60. And let's say he has saved 10 lakh rupees so far.
Ramesh, just a second. I don't think his attention is here. Okay. Can you just talk something? Perfect.
Yeah.
Okay, Ramesh, yeah.
So let's say you're 30 years old and you have 30 years career ahead of you. And you've got a gift, you got a savings of 10 lakh rupees. So you start putting it in the market and you double it every 3 years.
Yeah.
That means you can get 10 doubles in your lifetime, right? So Neeraj, you want to do the honors and take him through?
No. You are good at this. I'm not. Okay. So I would love you to,
for you
so
to
do
take
it.
10 lakhs. What happens after 3 years? How much do you have?
It becomes 20 lakhs.
20 lakhs. What happens after 6 years?
It becomes 40 lakhs.
40 lakhs. What happens after 9
80
years?
lakhs.
Keep going.
1 lakh, 1 crore 60 lakhs.
1 crore 60 lakhs. Then
3 crores 20 lakhs.
yeah. Then let's just round off 3 to 6 ho gaya.
Yeah, so 6 crores 40 lakhs. 12 crores 80 lakhs.
Yeah.
So
25 crores.
25 crores 60
8
lakhs.
doubles. 50 crores.
Yeah, 50 crores, then 100 crores.
What did you start with?
I started with 10 lakhs.
And now you're 60. How much do you have?
Made 60 lakhs.
No, you have 100
sorry.
crores.
Sorry, 100 crores.
What are you saying? 60 lakhs?
Sorry.
I'm going to faint out here. You'll have 100 crores.
Yeah.
100 crores.
100
Now,
lakhs.
I don't know. 100 crores in dollar terms today is about $12-30 million US. Okay? That makes you rich anywhere in the world you go to. You could go in Tokyo, you go to New York, you go to Beverly Hills. You'll be a rich person, $2 million. What have you done? You invested and you compounded your money. Let me tell you a secret. The Indian market is giving you that opportunity. When I started, the index was below 800. Today it's 66,000. Okay? Index is up 60 times. Forget what. If you are slightly superior, you can compound at better rates. And all it requires for compounding at that rate is maybe 22-23% a year. The Sensex itself moves at 15-16% a year. Plus you get 2% dividends. So you just do a little bit better than what the market's doing. And you're on the journey. And let me tell you a secret. Every single value investor that I know in Dalal Street or Wall Street has used that formula to get rich. Occasionally you'll have a brilliant guy who can really bet big on a stock and make it through one particular stock. Or do a great amount of trading as George Soros did. But mostly you plod your way to wealth. You become financially free not at 30 but at 60. But there's a way to all of you to do that. There's nothing stopping you. I'm convinced that the next 30 years are as exciting for India as the last 30 have been. So the markets are going to be buoyant. India is a growing economy. And you've seen the path. Compound your way to wealth, Neeraj.
Thank you. Awesome exercise.
It's available to everyone. That's the beauty of it.
Yeah, I think that's the beauty of this,
Not
right?
a priest store that's available to me or Bombay people or Dalal Street people. You just find businesses that can double every 3 years. That's all you have to do.
Yeah. And well, that requires some hard work. As Ramesh said about Utpal's example, I'm saying that what he's saying is not as easy to do, requires hard work, but there is a method out there as opposed to
Warren Buffett said that the best, and I'll repeat that. It is simple, but it's not easy.
Yeah,
It's simple. You find a great business at AA 3 years. It's easy to find it. No, I spent a lot of my hair doing that.
Yeah, you can imagine that. So, how do you therefore? So one way is to, of course, try and gauge the opportunity size, the terminal value. By the way, I had one question. Ramesh was talking about कि रुपए की चीज अठन्नी में लेनी चाहिए. You talking about terminal value. Are these the same, or are these kind of different methods that you use, wherein he's looking for discount to the current intrinsic value and you're looking for the terminal value, and which means कि एक रुपए की 4 रुपए की चीज फिलहाल 1 रुपए में मिल रही है, बट एक फिलहाल तो उसकी वैल्यू 1 रुपए ही है, but you are buying it because future में 4 रुपए होगी. Is there a difference there? No.
I don't think there is a difference.
No, right? I'm just asking.
He's not talking about आज रुपए की चीज आज 4 आने में मिले. That रुपए की चीज value today in his mind is that intrinsic value, right? And therefore that intrinsic value in some sense is also the terminal value, or intrinsic value is a function of that terminal value for sure, if not the terminal value.
So when I look at the examples that we are talking about, and Ramesh's example of United Spirits, and I didn't know that you were the Sutradhar there, but that is a well documented and well spoken about example as well. A lot of people cite that in business schools as well, by the way, Ramesh, in case you didn't know. Yeah, I'm serious about it. So my question is that India seems to be a consumer story. That way, if you go to try and look at it, how do you figure out the ponds in which you should fish? I'm not asking for which pond is there right now. I'm just trying to figure out that if you think of the growing population in the growing per capita, then all consumption stories will feel like the pond. So when you guys are thinking of that, okay, let me try and think of which space is it that I want to go and first look at top down, then try and go bottom up. How do you narrow down on those sectors, themes, ideas?
Okay. Then it's not necessarily about narrowing it down, running a process of elimination, like you said, that sectors, then themes, and so on. At any given point of time, to my mind, there are more than 10 to 15 mega trends which are underway already in an economy. I cannot expect to know all of the 10 to 15 mega trends. So whichever few I do get my conviction in, those are the ponds that I will fish in. But the beauty of these mega trends are that they are decadal mega trends. They are not transient mega trends, right? Otherwise they wouldn't be mega trends. So the consumption theme started in the 80s, still continuing, and will continue for the next few decades too. So it's such a long runway that you are getting. In the 80s, the big drivers were the staples, right? So the Unilevers of the world and Nestle's of the world. At some point of time, the value moved to retailing, and within retailing to specialty retailing. In many sense, Titan is a branded lifestyle retailer. It's catering to consumption. Yes, but it is a discretionary consumption. Right? The staples were not discretionary.
Yeah.
So even within one mega trend, you will find segments within that, and you will have to keep evolving your investing strategy to cater to those segments as they are evolving. It's not a constant.
Okay. So you follow the value migration in some sense. Okay. What gives you the conviction, either of you, that this trend is a mega trend? Because there are some false trends as well. So how do you distinguish between the two?
Okay. So see, investing is a craft. Craft means it's a combination of skill and science. Science, the basis is falsifiability.
Okay.
That the way to prove something is to prove that the opposite cannot be true. It cannot be falsified.
Okay.
Okay, that is how you prove something, that it cannot be falsified. Same way, you build your hypothesis of a mega trend and keep testing that hypothesis. If it gets falsified at any point of time, you change your perspective. But if you are right about it being a mega trend, then it's not falsifiable.
Got it. Okay. So in some sense, you are saying that at the start, you may not necessarily know for sure, but you have a hypothesis. Then you move along with the hypothesis. You test it at various points of time. If it doesn't get falsified, then you are on the right track. That may even give you the conviction to even buy it. The first point that we were making, that you bought it at X, then you're buying at 2X, 3X also, because your hypothesis is turning out to be true.
Yes. And one of the beauty of Rakeshji was that he had an iterative mind. Okay. So while he would have a hypothesis, he would keep testing the hypothesis again and again and again and again.
Okay.
It's not that he needed it to be proven every month. No. But in his mind, he would test the hypothesis. And it's a continuing process. It's not a one-time exercise.
Okay.
You do not determine a mega trend once.
Okay, at once. Okay, great. But Ramesh, you want to add to that?
Yeah. Utpal says is right. The mega trend is India shining, or India becoming, third biggest economy in the world. But I tend to look at it at more discrete snapshots rather than really trying the mega big trend. If you had the bullish view in India in 1990s, you really could ride this trend out big time. Well, we've been all in bullish and all invested. I tend to look at bull market phases. I think every bull market will have a set of leadership, and you want to find what the leadership is likely to be. So, for example, the 90 bull market was led by cement, and you know what happened to all the cement stocks. The 2000 bull market was led by tech. You know what happened to tech. 2008 by real estate and infrastructure. So the question I asked myself before this bull market began is, where is the leadership in this bull market that is going to happen? And one of the things I've learned after 30 years watching the market, the more hated the sector, but the more the prospects are changing, that's where you should fish for. That's the pond you should fish for. So very respectfully, I was very bullish on the public sector stocks, because I had what I call the margin of safety. These stocks were so cheap, the railway stocks, the bank stocks, the defense stocks, that I actually had to rub my eyes in disbelief that things could be so cheap. For example, a stock which I own and I'm not recommending, we bought all the shipyards. They were looking for enterprise value of 1,000 crores. Each ship they make is worth 7,000, 10,000 crores. So they were extremely cheap out there. So we try and latch on to, we know the kind of profit that can be made once the market comes into fancy and these stocks go from under-owned and truly hated to over-owned and overloved. And my feeling is, just to add some perspective, again, I'm not recommending these stocks, but giving you perspective, is in this bull market, perhaps the evidence is now suggesting to me very strongly that it's going to be led by the public sector stocks. They were the most unhated stocks in India 3 years ago. What has happened? Banks have moved up. Defense have moved up, railways have moved up, the consultancies are moving up. A lot of the unhated stocks will now also start moving up. So that means the whole market is re-rating the entire basket. Why is it re-rating it? First is under-owned, then the profit pool is enormous. I mean, these guys are making serious money. And something the government of India did, which people don't appreciate, but I appreciate, they said to all the public sector stocks, pay 30% as dividend. That's crazy. I mean, I was getting 5, 6, 7% yield even today on some of these stocks. I'm always happy to own these stocks at 6, 7% dividend yield. If it doesn't work, at least I get a dividend yield out of it, right? Luckily, they work too, so I got a double whammy in this stock. So I try to find where the leadership in the market is, because that gives you that X return out there. At some point, that is true, when the bull market gets over, ACC went from 300 to 10,000, the bull market in cement. Then it came back. ITC went from something to 400, I remember, maybe 40 times before it came down again. So all these stocks will also fall. But in the meantime, you get an enormous wealth creation opportunity out there. So it's something which is called reverse engineering, or what Munger calls in another mental model, invert, invert, invert. So try and project, this is a bull market, what will work, but by not saying what will not work, and what is the most hated stocks in India, And as you know, perhaps, because you interviewed so many people, I think some friend of mine actually comes up, makes presentation every year in a wealth creation study saying, and the PSU is the most hated sector in the world, you know. And so many people I talk to say, no, I don't buy our PSUs. They say with a lot of pride. I think they're a bit more softer now because you actually had made some money in these stocks. You made 10 times, 12 times your money in a lot of these stocks over the last 2 years. So the point is, the more hated they become, sometimes the more valuable they become. And it's very important as investors to keep your eyes and ears open. You can buy a great company like Infosys in 2000 and it didn't make any money for 10 years in Infosys because it was already priced into the market. So you want to buy things cheap. Again, what your mother's advice is very sound. Rupee ki cheez 18 mein milna hai aapko.
But Ramesh, can I ask you, I mean, again, what went behind your large conviction? Say, for example, I'm just trying to understand how you thought about it into PSUs this time around. It's well documented now. People know that you like it because you would have probably gone wrong in buying वो सस्ती चीज हर सस्ती चीज हमेशा अच्छी नहीं होती. You might have gone wrong as well. Was it the opportunity size or the fact that the government moves were changing? What gave you that conviction? This time around,
to be honest, it was just so cheap. I mean, I just couldn't figure out how they were cheap. I was getting the entire defense industry, the shipbuilding industry, for maybe 3,000-4,000 crores. Any destroyer, any frigate, any aircraft carrier need was made by these three companies, you know. And more importantly, they had an order book that would keep them busy for the next 6 years. That was guaranteed. Okay, and I knew that these contracts were profitable. What happens in the future, I didn't know. But as I spoke to you, they were so cheap. We had a company called Hindustan Aeronautics, you know, which is only nodal agency for aeronautics in India. At some COVID load, it was like $700. It's unbelievable how cheap it was at that time. You actually rub your eyes and say how cheap they were. You know, all these railway stocks. What is the government's instrument to do capex? It's through railways, through roads, through dams. So here was these companies available for the song. So it's just cheapness that attracted me. I luckily have made money in the past in PSU, so I bought, you know, great companies like Bell and Bharat Earth Movers and CMC when they were young often. A lot of people had bad experiences because they had MTNL and they bought. But it's like stock picking. If you pick a bad stock, you're going to, you know, lose money. You can pick a bad stock in the private sector and not make any money. If you bought DLF at the highs of 2008, you're still losing 67% of your money. 67% of your money in DLF, the greatest real estate developer that India has seen. So, I mean, you know, to me, it was just pure value. And that's why I believe that I like to think of myself as agnostic. I want to see value, I'll buy it. Whether it's a public sector, it's an MNC, or whether it's a cyclical business.
Okay. Thanks, Ramesh. This is very insightful. Thank you for that. Yeah. Round of applause. One of the things that you spoke about, and I read it in a note that came to me. Piracy, I'm sorry, but it came to me, so I read it. Was this thing wherein you had spoken about how, and correct me if I'm wrong, but the difference between a monkey and a gorilla when you're picking up a theme, etc. Would you want to kind of elaborate that, because that will give great insights to people as to even if they've got the right sector, how do they go about choosing the right company?
Sure. Thank you, Neeraj. So, you know, sometime in the 90s, I read a book called Gorilla Investing. And it stayed with me. However, that concept of gorilla was that even if a stock that you bought, which is 5% of your portfolio, if it is a superlative company, then it will eventually become 15-20% of your portfolio. It becomes the gorilla in your portfolio. But as Rameshji said, invert. So instead of thinking about the gorilla in my portfolio, I should think about the gorilla in the business, right? So when we say that, I mean, Rameshji just referred to the other component other than megatrend, which is leadership, right? So megatrends plus leadership is very powerful, right? Now he talked about looking for the leaders in the segment that will outperform the market, the next bull market, right? I'm talking of leadership in the context of the businesses. So if you say that megatrends is figuring out which jungle to go to, then leadership is figuring out which animal to bet on in that jungle. Okay? And gorilla actually is a very powerful parallel, because in a jungle there are many monkeys, but gorillas are few. So first and foremost, gorillas are rare. Second, the average lifespan of a gorilla is much longer than the average lifespan of a monkey. So longevity is a second attribute to gorillas. Okay. Third, monkeys you will find going here and there, jumping around, much more easily distracted. Gorillas, you will find them going in one direction. So they're far more focused. So there's so much to learn from gorillas in this way. So I think that megatrends plus leadership is a very powerful thing, and that is where bulk of the value is created. So Rameshji identified the PSU sector, which was the right jungle for him to invest in. But apart from that, he also bet on the right animals. Okay? If he had bet on MTNL, as he pointed out, then he would have lost. So you have to get both sides of the equation right for you to make extraordinary returns over a very long period of time.
Is there a hack to do this? Can people try and follow a few basic principles?
He is the master. He has the highest number of multi-baggers, or rather 100 baggers, that anyone in the capital market knows of.
Wow.
Before you applaud too long, that's a myth going around, but we'll leave it at that.
Sorry, I missed that.
I said before they applaud too much, that's a myth going around, promoted by Utpal and a few friends of mine. I pay them enough, I guess, so they say these things. But actually, I mean, there are 2 points that I'll just bring as more as a self-confession than anything else in this point. That he's right, I've had an ability to pick a lot of great stocks, maybe Infosys and McDowell's and eServe and a lot of stocks that even I've lost track of some of the good stocks. But I asked myself this question: why am I not a billionaire and my friends are a billionaire? Okay, that's a very pertinent question. I don't want any sympathy because I'm fine. I live a comfortable life. I go where I want. I take care of my health. I have no issue about that. And I think the difference came down to the size of the bet. You know, as I've told many times in the past, that we are working with the same raw material. And using the raw material, my friends became billionaires, and I have not reached that stage. And why is that? I asked myself this question. And it's not out of self-sympathy that I'm asking myself. I'm asking myself to understand what the difference was. That when these guys, my richer friends, are fearless, you know, if they believe in something, they'll put the money on the table and do it. And that's a very important quality that an investor needs. And perhaps I'm more of a middle-class background. I'm more risk-averse, you know. I want to protect what I have rather than, you know, go shoot the daylight out of it. I don't know. They're all excuses, you know. But at the end of the day, everyone in the markets, who's in the markets, you want to be the guy who wins the Olympic gold medal. You want to be the guy who wins the Oscar nomination, you know. And you do that by the amount of zeros in your bank balance. As simple as that, you know. So it has been a regret of my life only because you have an ego and you want to be the best, right? And then you realize that you fell short. But I think I'm beginning to understand what went wrong. That while you had as good multi-baggers as Utpal points out as the next guy, so I don't feel, you know, maybe Rakeshji had Titan and I had, you know, ITC, whatever. We all picked our own stocks, and we all pick our own stocks, which is great about value investing. We all pick our own stocks out there. But in order to become the best of the best, you do need to, you know, take that bigger size of the bet, you know. And, you know, Munger puts it best. He says you have 3-4 stocks, you don't need more. And I'll give you an example which might illustrate his point. He said that he had some $10 million or so sitting in the bank for like 10 years before he bought anything. And then one day he read a story in Barron's magazine, and he said, oh, this is the stock I want to buy. And he put all $10 million into that stock. That, he said, was a no-brainer I've ever seen. After 10 years of reading, he found one no-brainer. That became $50 million. He sold that, and he gave it to Li Lu, who is now a fund manager. And Li Lu made that money 20 times. So he said, make 10 million into $1 billion just on those two investments out there. So it takes courage. I mean, you know, I wish I had that kind of courage. As Neeraj and I talk sometimes, hopefully my son will have it, and I did. you pass it on to the next generation. But there's no reason to be disheartened. I mean, I still lead a good life. I mean, I may not be a billionaire, but I lead a good life, and so can all of you. If you start investing early, and the longevity of that returns is there. As Neeraj and I were talking last night, that Warren Buffett, one of the richest persons in the world, made 95% of his wealth after he was 50. After he was 50 years old, he made his wealth. How did he do that? Because he lived to 90. He's compounding his wealth for 40 years before and 40 years after that. So the trick comes back to the same old things: compounding, longevity of the investment, and making sure you reverse engineer. What can ruin your life? Doing drugs, trading a lot, running in tracks, doing all stupid things. So if you lead a clean life, a healthy life, and you can compound over 40 years, there's no reason that anybody in this room cannot follow the same path.
The second thing that you said hurt a lot of people here. Trading a lot.
I know it's not good to say the brokers conference trade a lot, but Goda घास से दोस्ती करेगा क्या करेगा? But what I suggest to people who ask me that, take 5% of your money and trade, because you might enjoy that process. It's intellectually stimulating. It's nice to be in the hurdy burly, but 90% focus on long-term investing.
Got it. Okay. Can I? Thank you. Lovely insights. Can I ask you guys to tell us maybe? Actually, just before I ask you guys about your mistakes and what you've learned from the mistakes, just one quick thing about how do you? Maybe I'm actually repeating the question. I'm still wanting to know because maybe I haven't gotten the answer. Is when you bet the house, when you back up the truck and buy, maybe you do leverage as well and buy. Rakesh was famous for using that as well, right? And I think you've told me so many times. I haven't had the chance to talk to you, but I'm sure you would echo the same thing. What gives you the courage to say कि ये bet पे और ये investment पे I'm willing to bet my house? I mean, how do you develop that courage within yourself? Can you talk maybe about that before we talk about the mistakes?
The tough ones for him.
Sorry?
The tough questions are for him.
So first we must define what do we mean by back up the truck and bet the house. If when you are making a bet, if you put 50% of your portfolio in that one bet, is that backing up the truck and betting the house? Or is 40% the threshold? Or is 20% the threshold? Or 10%?
Okay.
I can tell you that for Rakeshji at any given point of time, the single largest bet that he took in his portfolio was never more than 10%.
Okay.
Right? It's how you allow that bet to keep progressing. So when Titan crossed 25% of our portfolio, I went to Rakeshji and said, we should lighten up because it's too concentrated. And he said, ये सब अंग्रेजी मुझे मत सिखा. ये सब statistics है. He says, do you see any problem in our hypothesis? No, na. So chalne de. It went up to 33% of the portfolio. He was still comfortable. But I think when we talk about backing up the truck and betting the house, we all interpret it as saying, I'm putting 40-50% of my portfolio in that stock.
You're saying that's not wise?
No, I'm saying not many people do that.
Got it.
And probably most successful people would not do that.
Okay.
10% bet is large enough at a point of time. The key word being the point of time. Over the continuum, as your conviction rises, as your belief in the terminal value rises, as your hypothesis is more battle tested, as the company's business model and its management team demonstrates its resilience and adaptability, it is then that you keep allowing it. So one of probably the single largest check that we wrote at Rare, that Rakeshji wrote, was in Star Health Insurance. Okay, we invested 1,500 crores in one company. but it was not even 10% of our portfolio, is what I'm trying to leave with you. We thought we were betting the truck.
Okay.
We were ready to do a buyout of the company, but in partnership with somebody else. We were not betting. However, at 30% below the price at which we bid, if it was still available, I had the mandate from Rakeshji to go ahead and bid for the full 100% of that company. So I'm trying to give you the linkage between value. As Ramesh ji said, वो रुपए की चीज 8 आने में मिलती है तब तक ठीक है, तब तक आप 10% ऑफ द पोर्टफोलियो करो, लेकिन रुपए की चीज आपको 4 आने में मिल रही है, then go up to 20%, go up to 30%.
Got it.
Right? But it is over a continuum. It is not at a point of time.
Okay.
Is my sense.
And is your thought the same as well? I mean, one is what Rare does, Rakeshji do. Is your thought the same as well? You do over 10%, not more than that, etc.
Yes.
Okay.
I would go by the same path. At a point of time, I would not go above 10%. For me to go above 10%, I need to see my hypothesis battle tested. The business model and the management team battle tested. I want to see resilience and adaptability.
Got it. Ramesh, same thing.
I'm evolving as an investor. It's extraordinarily difficult to buy, as you said, in a continuum. Keep buying higher. You can buy $40, you can buy 60, you can buy it 100. To buy it 400 takes a leap that I have not made yet. And in fact, on the contrary, I've sometimes been a seller of these stocks, perhaps too early, because I made 10 times the money. What's the big deal? Let's sell something. And sometimes to my regret, but it's an evolution of an investor. I'm not there yet.
Okay, fair point. A question on the mistakes, Ramesh. What has been the biggest learning for you from your mistakes, aside of selling early, of course? And is there something that you do now to avoid the mistakes? I mean, is there a process that you put in, a checklist of sorts that let me do this so that I avoid the mistakes that I've made in the past?
How much time do you have? Lots of mistakes.
we still have about.
We can go a long time without mistake.
The top 1 or 2 or 3.
I'll tell you a couple of stocks that I got wrong. I got MPNL wrong at one point. I recently bought a company which I was very passionate about. I really thought they do well, called Quick Heal. They make cybersecurity software out there. Very nice people, good 90% gross margins, 25-30% net margins. And I thought the cybersecurity market will just explode. The company is not being able to deliver the growth. So, it happens once in a while. You pick a stock. They're good people, good interest management. You just could not grow the business. So, the stock, even today, is below its IPO price. So, I got that wrong. So, you make mistakes. But what I try to tell the kids who come to me is that if you look at your overall aggregate portfolio value, and if you're broadly doubling every 3 years, for me, that's the benchmark. Then a lot of mistakes get covered in that. It's fine. I make a mistake I could afford to make because my portfolio still kept churning along. Some other stock made up for that performance out there. So I would say, to me, that's my brick road or my road to Kathmandu, as they say. That if you keep doubling your money every 3 years, you're doing something right. And that will cover all the mistakes also, because net, your portfolio is doubled every 3 years. Okay? Broadly over the last 25-30 years, a lot of successful investors have been able to do that. Okay, so I would say that despite all the many mistakes I've made and whatever, I wish if I was my younger self, he asked me what quality that you wish you had when you were younger than you now.
Okay,
I wish I had more courage and conviction. I think the difference between, say, Rakesh Jhunjhunwala is the amount of courage and conviction that he bought. You talk about megatrends. In 1989, he was telling me that India's time has come, that India will be, not a third world country, but the third largest economy in the world, that the tax rates to 90% will go down to 30%, that trading systems would evolve. He was very clear, even in the 89, 90s, that this was the huge megatrend. And whenever the market fell, it's not that he felt the market would always go up, but whenever it would fall, he would buy, he would remain bullish on India. So the megatrend that he captured so well was bullish on India. And did I capture it? No, I didn't capture it fully. We remain bullish, we remain invested, but whether his heart bled because he believed the opportunity was there in India.
Actually, Mia, can I ask you something? Ramesh had told this to me in an interview that in the heart of COVID, Rakesh, this is a public this thing, so I can mention this, that Rakesh did a call and said that, the bear market is over, bull market chalu hoga. I'm sure that would have been discussed at your firm as well. Just trying to understand, how do you guys think about or good times at the time of deep despair? COVID was one such time, right? So अगर तभी आपने सोचा कि, oh no, this is actually an opportunity. How do you think about it? If you have some insights there. I don't know, I mean, if you do currently, out of the blue, but I'm just asking you.
Sure. So some of the best picks that Rakesh ji had were in the time frame 2002-2003, and Ramesh ji will validate that. Those were the times that both of them bought Bharat Electronics, Bharat Earth Movers, McDowell's, Titan, right? All those. So what was that environment? That environment was an environment of despair, where everybody gives up hope. And valuations are strongly in your favor. So in 2002-03, if I'm not mistaken, and Ramesh can correct me, that the index valuations were between 8 to 10 times trailing earnings. Okay. And when you are in that despair, the logical economic policy consequence of that is to cut interest rates and flood the economy with liquidity. I think Rakesh ji could recognize that that sentiment of despair was the same. And when Nifty was at 7,000, COVID bottom was 7,000.
Yeah, roughly there.
The valuations were not 8 to 10 times, but not very far from there either. Right? And that flood of liquidity and interest rates getting cut was bound to happen. US had announced, the Federal Reserve had announced that they will do quantitative easing, the next round of quantitative easing, which was massive. So, but only Rakesh ji could see that. I couldn't. I remember we had internal debates on it. But he was so steadfast in his conviction.
That was his finest call, actually. Yeah. He was basically in a hospital bed when he made that call.
Wow.
Which is even crazier to think about. Dealing with pain and surgeries and what else. To be able to have that intellectual clarity at that time. And he was very clear, not like he was wishy-washy. I think, maybe, possibly. Ramesh Teji hai. Like that. It was a declarative statement. And he would also, if you were close enough to him, tell you the top 5 ideas he had at that time. I look back, it was like a wish list. I wish I'd bought all those 5 stocks. I mean, that kind of intellectual clarity I've never seen. And I think it was his finest call.
Does that happen in your top calls as well, that you are not wishy-washy? You guys, when you make your best calls, do you kind of, it's a table thumping yes, that yes, this is it? Or is it wishy-washy? Just trying to understand again.
I wish it wasn't wishy-washy.
Okay.
I'm full of self-doubt.
Okay.
I question myself every single time. And unfortunately, I rely on price appreciation to validate my calls. So, again, it's a work in progress. It's
sure.
Not. I wish I was had nerves of steel like Rakesh Bhaiya had. I don't, but still I've done okay for myself. So
yeah, sure, of course. Okay, so here's
Neeraj, if I may add
please.
Sorry. So, apart from saying that we are wishy-washy or not, I think the more important thing is it has a lot to do with the personality also. Okay. Rakesh ji was a personality who would be unambiguous and table thumping in almost every belief of his. Does not mean that he would be rigid or obstinate about it. He was always willing to revisit his beliefs. But he was emphatic about those beliefs. Okay. Probably other veterans would also have the same. But you find that one common quality amongst all the greats, whether it is Radhakishan ji or Nimish Bhai or Rakesh ji. I think they are very uncluttered in their mind. They have clarity, but that clarity arises from simplicity. They don't complicate stuff. They think in a very simple, straightforward way, and with full belief and conviction, because they have three defense mechanisms. The defense mechanisms that they have, the first and foremost, is the fact that they know that they are iterative in their mindset, and that if facts change, they will change their opinion. The second is they know that the trend that they are chasing is so big, the wave that they are chasing is so big and so large and so long, right, that there will be many opportunities along the way. So rather than try to be precisely wrong, it is better to be vaguely correct.
Okay.
Right? Getting on top of that wave is more important than analyzing it from 100 different ways.
Sure.
Rakesh ji used to say analysis paralysis. Okay, that is the second thing. And the third thing, I think, is all of them had such a well-developed framework of risk management that they had the confidence that even if they go wrong, they will get away without getting hurt too much. Right? So if you are in a boat in the middle of the sea, if you know that you are a good swimmer, you wouldn't mind jumping into the water. Right?
Sure.
Just for a small swim.
Yeah.
But if you're not a good swimmer, there is no way you're going to jump into the water.
Sure.
Very well put. Great insight.
Yeah,
Right?
great
Lovely insight.
So these three factors are so important. Rather than to just say that this is the way that they were behaving, I think going to the root cause of why they were behaving in the way they were behaving, understanding how their brain was wired.
Sure.
I think, and we can only attempt to know that. I'm not saying that we can know that.
Yeah, of course.
But maybe these are maybe Ramesh ji can add to this.
No, this is great insight. What the swimming inside and the boat he gave me, that's, as you say, simplifies a complex problem. And
Yeah.
Right, he's absolutely right about that. And just to add to Bhaiya's COVID insight that he had out there, he got that mega trend right, he got this leadership right, he got the, everything right. And I still wonder at the time, unfortunately, he's no longer with us, and the index is 66,000. But if a man saw it, he saw it. Just plain hard truth that, how do you see that during COVID when the world could be shutting down? We didn't know what's going to happen the next quarter, forget 3 years down the road. But the kind of belief and whatever he saw was actually extraordinary. We witnessed history together, I think, Utpal and I.
Yeah, most certainly.
I'll add to that. He saw that a few times in his life. I think any one of us will consider ourselves great if we see it once in our lifetime. Right?
Absolutely.
In 2002, Rakesh ji and I wrote an article together in Economic Times, front page, talking about a structural and secular bull run. At that point of time, most investors in the market were so battered that I think they'd forgotten the spelling of the word bull. Leave aside thinking of structural and secular. And this is documented in public domain. So it's not about he told Ramesh or he told me.
No, it's a well-documented story.
Same way, in 2014, on 26th May, again, front page Economic Times, one more article that we wrote, Rakesh ji and I. And you will find that again, the conviction was his. The words were mine, but the conviction was his. So he saw it in 2002, he saw it in 2014, he saw it in 2020. To get 3 such big ones, right, in a time span of 2 decades, of 2 decades, is mind-numbing.
It is mind-numbing news, but what I can tell you, audience, is that they don't need to get those big calls right. They need to remain invested in good businesses.
Yeah.
And the compounding will take them there. They can have these extraordinary results. You don't need to get all these things right. That you get them right means you're a magician. I truly am humbled by what he did. But to the rest of your audience, it doesn't mean you have to get all those things right.
Yeah.
You'll find good businesses that you want to remain invested in. That's all.
Yeah. Okay. One slightly relevant question to the current times. We have maybe about 15 odd minutes more or 10 odd minutes more. One question related to that, Kazan. Both of you said that, in despair, you get good valuations, you can, really buy. We are in anything but despair, right? 20,000 on the Nifty, circa 20,000. There is euphoria all over. India is the cynosure of all eyes. Would you back up the truck and buy currently?
I'll answer that first. I'll stick my neck out. Yes.
Yes.
I wouldn't leverage because I never leverage.
Uh-huh.
But am I fully invested? Yes, I'm fully invested. Am I fully invested? I believe the next 3 years will be better. Yes, I'm fully invested on that. Yeah, I mean, you can tell. I'll tell you a very famous story. What happened to me in 2008 at the top of the bull market. In my previous lifetime, I used to live in Hollywood, in Los Angeles, Neeraj. And my brother-in-law was a director of films in Hollywood out there. So a lot of people from Bollywood come down and visit us in that time. This is the 90s I'm talking about, right? So I won't mention the name of the actress, but a very famous actress who name begins with a Z. You can figure it out who she is. So I met her last in 93, 94. Okay? And in 2008, at absolute top of the bull market, she calls me. Now, how did she get my cell phone number? I have no idea. I haven't talked to her in 20 years after that. Okay? She called me. I said, of course I recognize you, she asked me. I said, of course I do. She said, Ramesh, I want to apply for this Reliance Power IPO. Can you tell me how to apply that? And that rang a bell to me. I said, how can it possibly be that the most famous star in Bollywood is calling me to apply for an IPO? I mean, so it rings bells. Sometimes the excesses ring bells to you out there. I don't see any of the excesses. There's jubilation, of course. There should be jubilation, but there'll be even more heightened jubilation at, say 25,000 on Nifty or whichever level. And there are ways to suggest that, the market is stopping out. I'll finish this by paraphrasing what Peter Lynch said, which I read on the flight here, which I think the audience will enjoy. Of course, as you know, the market fell 1,000 points on Friday. So I don't know where the next 5,000 points of the Nifty are going to be. Maybe they'll be up, maybe they'll be down. But the next 20,000 points of Nifty are up. So you want to remain invested.
That's a good one. Utpal, you want to share, what is your thought process? Are you nervous? Are you constructive? Because it is euphoria time. Oh, sorry, it is circa euphoria.
So I will say that we are fully invested, almost fully invested. And I am still finding opportunities. So long as I'm finding opportunities, I'll keep going. I'm not focused on whether the market is at a high or a low. And we must also recognize that those times of despair are once in many years. So you can't always say that I'll keep waiting for that to buy, right? I have to play with the cards that I'm dealt with, right? At this point of time, I am still finding opportunities. I still see that the dispersion of valuation is quite high. So there are some segments of the market which are maybe a little bit frothy, but there are other segments of the market where you are able to find opportunities. The defense mechanism, like we talked about those grades, those 3 things that I told you, same way you have to have a defense mechanism against valuations. The first is, of course, that you try to buy at the best price possible. But more important than buying at the best price possible is buying the right thing, the right stock, right? So even if you feel that it is the right stock but not the right price, go in, put 5-10% of your money that you wanted to invest in that stock on the table. Okay? Then wait. for either the price to correct or for your conviction in the terminal value to increase. And when you see that gap, then you move in and add more and keep repeating that process. So that is your first mechanism. The second mechanism that you have is portfolio. Okay? Instead of thinking what is the valuation of the market, think of what is the weighted average valuation of your portfolio. Not that I'm recommending a stock, but think about it that there are probably the largest private bank in India today is available at one of the lowest valuations of that bank relative to its own history, right? At a time when the index is at a new high. So think of the valuation of your portfolio rather than thinking about the valuation of the market. This is the second one. And the third one is think of the optionality in your portfolio. Okay? Because valuations capture the things in a given trend. However, every company has something inside it which is an optionality. So I know of a friend of ours, a common friend of ours, who bought iShares because of the potential he saw in the truck business. Ended up making a lot of money because of the motorcycle business.
He mentioned this in the show recently.
So the motorcycle business was the optionality there, right? Same way, I think in every company there are optionalities. You have to be able to understand those optionalities. You can't price it. It's not mathematically possible. But you have to understand the presence or the absence of optionality. And that is how you react to it. So in that sense, I'm less worried about market valuation. I'm more worried about my portfolio construct.
Awesome, awesome insight. Thank you, both of you. We'll probably take 2 or 3 questions because time is short. Would you raise your hands and then, okay, the gentleman in the third last row, can we give the mic to the person in the maroon shirt, please?
Hi, sir. Just a small question to both the panelists. So we always talk about how to look out for opportunities or how the process works. But could you also explain how do you plan or how do you get out of that opportunity if you see has the thesis changed or is it just the valuations or the management? How would you look at that?
I told you our company had bought Quick Heal, and I believe the cybersecurity market would boom. That's what my belief was. And after holding you 3 years, I realized they could not able to deliver sales growth. Maybe the foreigners were taking them, maybe the products went to mark, whatever. So the hypothesis changed. It's not a growth company anymore. It was in some ways a value trap at that price, right? So I exited the stock because I understood that I made a mistake. And this will happen quite often in the market, that a hypothesis you think should work out does not work out. I was very gung-ho bullish on the company when I bought it. I thought it could grow at 20-30% because I thought the cybersecurity market itself would explode. And maybe the market's done well, but this is not the right candidate to fill that market. So if your hypothesis is wrong, you should get out of the stock. It's as simple as that.
Yeah, I would fully second that the reason to sell is the break of the hypothesis. However, there are times when you are forced to take a sell decision, not just because of insane valuations, but sometimes because of relative opportunity. Okay? So I talked to you about Rakeshji buying Titan at 900 rupees. Right? What I did not mention to you was at that time he sold Bharat Electronics and Bharat Earth Movers and switched.
Relative opportunity.
It was the relative opportunity in his mind. Sometimes, very rarely, but you do come across that mind-blowing switch opportunity. And it's imperative that you take that at that point of time, but it's very rare.
And it's even rarer to execute correctly. It's one of the hardest things to do. So.
Thank you,
I
sir.
hope that answered your question. Yes, please. Yeah, the gentleman in the blue shirt here. And the one behind.
Yeah, hi. So it's a two-part question. The first being, many years ago, people always talked about Indian markets lacking depth and breadth. I think that's changed. Like, Indian markets have the depth, but they don't have the breadth compared to overseas markets. If you agree with that or not. And the second part is like, you've like enlightened us with a lot of information, but it's a cheeky question. Can you identify those mini jungles with baby gorillas? Make it public in any sense? And Ramesh, can you highlight any hated stocks or hated domains with the best margin of safety right now?
See, it's like in my marriage, all the hard decisions I make. What has happened to global warming? What is going to happen to the Fed? That all decision I make. All the easy decisions my wife makes. How much you spend, where you go on a vacation, whatever. This is an easy question. Ask Utpal to answer it.
So let me first come to the first question that you asked about the breadth and the depth. I think for years, Indian public markets have had very good breadth, and I think now that we are the third largest market cap in the world, it's no longer right to say that we don't have the depth. I think we have the breadth, we have the depth. In fact, I think India is one of the few investable countries of size anywhere in the world. And I remember a few months ago, Rameshji was there at the Trust Debt Conference. I asked you a question, Rameshji, that do you see India becoming an independent asset class? And I think India is on its way. It may take another 5 years, maybe 10 years. But India will be an independent asset class. India will not be just one component of the emerging markets allocation globally. Coming to your second question, see, Rakeshji used to tell us, you cannot invest on borrowed conviction. So you will have to build your own conviction in those jungles and in those animals, right? Rameshji and our portfolios are a lot in the public domain. You know what we are doing. It's not a secret. And we never believe that we are operating out of secret. We are actually operating out of a mindset of abundance. There is an ocean out there. Anybody can go and fish in it. Anybody can take a bucket full of water and the ocean is not going to diminish. Okay, so there is no intent to hold back anything. There are regulatory reasons that Rameshji and I won't be able to speak about that. But trust me, you apply yourself to your process and it will work. You'll have to keep evolving, keep learning. If I may take this opportunity, I made a presentation on mistakes. Since you had asked that question earlier,
Yeah.
but I didn't get the opportunity to answer. At the CFA Society in September 2022, within a month of Rakeshji's passing away. But I think I will draw your attention to that presentation. It's available on YouTube. More than talking about what mistakes we made, the idea was to share a mental framework of mistakes, how to think about mistakes, how to identify root causes, and how to understand the implications of mistakes. What are the kind of mistakes are not just where you make losses. Sometimes mistakes are your opportunity costs also. And the opportunity costs are usually the larger mistakes.
Okay. Thanks. If I may, to the gentleman there, just one small thing, because I see this at all investor meetings that happen, right? That there are two very smart gentlemen out here, or two, not necessarily men, even women, and people tend to ask them, what is it that they are buying and selling? What is the end to that? The end to that is, कि आप आएंगे, आप उनसे समझेंगे, उन्होंने शायद ये एक सेक्टर बोल दिया, ये एक स्टॉक बोल दिया, आपने शायद थोड़े पैसे का ले लिया, और शायद 5 साल में, इनका टाइम होराइजन अलग है, 5 साल में डबल होगा, आपकी वेल्थ को क्या फर्क पड़ेगा? कुछ नहीं. गलती से आपने बहुत बड़ी बेट कर दी. जरूरी नहीं है कि हर एक स्टॉक में सच हो. आपने शायद वो स्टॉक में पैसा डाल दिया, इन्होंने 10% नीचे काट भी दिया, आप तो काट नहीं पाओगे, आपको पता नहीं है आपने क्यों लिया इन द फर्स्ट प्लेस, and you'll be holding a lemon in your portfolio for the longest time. So I think the idea of this conversation today as well was to understand their intelligence and not the stock that they are buying, because that will not help you for life. Try and do what I think Utpal just mentioned, the process, the conviction, instead of trying to figuring out the jungle and the gorilla from these people, is my humble request to all of you. Sorry, we have maybe one more question time. Anybody who's got a mic? If not, then yeah, the gentleman.
Yes, sir. Hello.
Sorry, somebody has a mic, my friend. Sorry.
Hello.
Just let him answer, please. Let him ask the question. I'll give you the last chance. Yeah, perfect.
Hello, sir. Sir, everybody says don't rely upon the borrowed ideas, right? You are, as investors, and all your stock pickings are in the public domain. Sir, do you know anyone has ever tried to replicate the exact portfolio of yours? And because every day we know that who is buying what, Dolly Khanna buys this, Vijay Kedia buys this, he sells this. So does everyone can ever replicate all your ideas and get at least 70-80% returns of what you are achieving? Is it possible, sir? Because now everything is in public, sir.
Sure. First, let me correct you. I did not say that you should not invest on borrowed ideas. I said you cannot invest out of borrowed conviction.
Okay.
There is a big difference. Okay?
Sir, I have conviction in you.
No, I understand. The point I'm trying to make is, I have no shame in investing on a borrowed idea. But the conviction has to be my own. I'm trying to make that distinction. Okay? Even if you have faith in anyone, eventually your faith has to be in your own conviction. Investing is a very lonely game. It is an infinite game, but very lonely. So build your own conviction. Invest from borrowed ideas, there is no problem at all. And theoretically, what you are saying should be feasible, but I don't know if anybody has ever done
nobody
that.
Nobody has threatened even to follow me, so that's fine. But you can't, I do many myriad things which you don't know. The public domain will be the larger bets, but the smaller bets that sometimes
more than 1% is available. If there is.
But that may not be any too great a part of my portfolio. A lot of my companies I own 0.5%, 0.25%, or 10,000.
No, I'm just asking about this idea. Is it?
No, you can't do that now, because if, for example, Quick Heal, to give you an example, was listed at more than 1%. It didn't work out, right? But another stock I own, say Masgon, which is not 1%, has made me 20x my money.
Okay.
And how would you know that? You can't, because you don't know exactly the different things that I do or how much I own of a particular stock. So it's not a good thing to do, as Utpal said correctly. Have you owned, it's very important. See, you want to be a long-term investor creating wealth for yourself, right? You need that long-term conviction. You can't do it on borrowed capital. You cannot do it.
But the conviction has to come from someone.
The last question, yeah, but please. Sorry. No, ask him. Finish your question, but the last one, yeah.
Because sir, borrowed idea has to be there. Because there are companies, there are few, and everybody's picking them. Mutual funds are there. You guys are also picking them. So if I have a conviction that Damani sir has conviction on this particular bet, I have studied that company, and if I try to replicate just like you, can I get?
Obviously, you get the same returns as I get.
So why people are not doing it, and we are doing all this?
We'll take this off session. I can't answer this question here, but it's not. I wish it was that simple.
Cool. The last question to the gentleman here. Yes.
साइकिल्स जो होती है कोई भी कंपनी में, तो जनरली वो अवॉइड करते हैं. तो सर, व्हाट आर योर व्यूज के कमोडिटी साइकिल्स में लॉन्गर रन स्टेबिलिटी नहीं होती है कई बार, तो वेदर वो कैसे सोचना चाहिए? और ईवी और रिन्यूएबल में सर आपका क्या व्यू है? दो क्वेश्चन है.
Sorry, what was the second part?
ईवी ईवी और रिन्यूएबल में आपको अगले 5 साल साथ मतलब क्या व्यू है आपका?
I mean, the first part of the question was again, repeat that.
Commodity cycles वाली
I
कंपनी.
mean, it's any business is evaluated as to what price you're getting at. So you can make money in commodity businesses, you can make money in consumer businesses. I don't have an issue with that. You can make it. Maybe I'm not good at commodity businesses, but people are good, make a ton of money. You can make so much money in a commodity cycle getting it right. So it depends on your expertise, whether you're good at and what kind of businesses you're good at understanding. EVs and this thing, I think it's a great opportunity. For you to find companies to play them in India is a bit harder because there aren't that many available. I think Utpal knows a couple, but they're much harder to find those businesses because I don't think we have scale in India in the EV business yet. So it'd be fine.
So with regard to your first question, Rakesh used to tell us the only rule is, the golden rule is that there are no rules. Okay. So we have no religion that we will not invest in commodity and so on. I can tell you that in commodities, we've had some of the best ever returns at ASK, and I think Ramesh ji will confirm, Nimish Bhai and Radhakishan ji also, along with Asit Koteja, had invested in ACC between the price of 100 and 500, and that went to 10,000 in like 2-3 years.
89 to 92.
Yeah. So almost 100x in 2-3 years. I know that at one of my earlier employments before Rare, we invested in a company called Shri Cement at a price of 27 rupees. It's 30,000.
Yes.
In 20 years. So there are opportunities, sometimes in commodities too. One should not rule out anything, but the preponderance of probability is that value creation does not happen in as much in commodities. However, it does not imply that it never happens.
Okay. Thank you.
The second question that you had on EVs and renewables, I think both those are part of a megatrend for sure. However, how that megatrend plays out and whether we are able to identify the leadership within those megatrends, that remains to be seen. At least we have not been able to find that so far. We haven't been able to find the right business model and the right management team.
Thank you, sir.
Okay, I think we'll have to call it a day. But Ramesh, Utpal, gentlemen, thank you so much. This was enlightening in more ways than one. Really, really lovely to hear.
Thank you.